Hi, good evening. Today, 20th of November 2012, M&M was the top gainer on Nifty stocks. So it pushed us to analyze M&M on a technical basis. This is a weekly chart for 3 years. This is calendar year 2010, calendar year 2011 and calendar year 2012 of M&M 1 month futures. We do analyze futures because it gives us leverage and the return on capital employed are much higher. So by default, we are in a tendency to analyze the futures because our client base is much of the HNIs. Now moving ahead, as we see that M&M started moving from the 450 levels, and mid of, that means around June of calendar year 2010, it broke that range and then it moved up till 850, and for last 2.5 years it was moving in a range of 850 to 600 and not much was done. But in the last week M&M broke this 850 levels and today it made a high of around 940 and thereabouts, 940 and change. And so now we wish that what is in store for M&M next. So by a very common sense kind of thing, 850 is a rough approximation of a stop loss and people can go long. Next, if we analyze, this is the daily chart of M&M, and what we see is that right from the start of this calendar year, that means calendar year 2012, this was the February peak, January-February peak of 2012, and then price drifted, but somewhere around in June the M&M prices were around 600, and from there it was a clean uptrend. You will see this trend line. First of all, the uptrend was like this and the angle of the trend line was this, and the next angle of the trend line becomes a bit steep. And what we generally have seen in stocks which are in bull run, that the angle will become much steeper, and this is the move that traders should try to catch. So this is a good support zone. As we can see, a virtual, much of the technical analysis as we practice is based on common sense. So what we see here is this level of a support is going to be a good support on a risk reward basis, and guys can go long at any dip up to the levels of 880. Next we will have a much more daily chart, much more what you can say illustrating is this was the previous peak. This was this once again January-February peak. Prices really moved up, then they really have a throwback, but this throwback actually these lows resulted in a form of a trend line. But when this somewhere around last calendar year October-November high, when prices met this, there was much of a vengeance and there was a throwback, but then the throwback was arrested by a trend line and also the moving average, which is 50 days moving average, a simple moving average, and then prices moved again higher, and next it moved and then had a clock of 920 levels. Again it was a throwback, and then today it made a new high. So what we can say that is simply prices are not reverting too much higher, and this trend itself is a very healthy trend until and unless it ends up into a blow up phase, and move can be taken up from here to that blow up phase. Next we will see a 30-minute chart, and what we see at a 30-minute chart is like 15 to 20 trading day range, and you will find that the prices were much here. This was 920 level, and today it has just moved up that level. So with this kind of a stop loss for positional traders or swing traders, we can go long for a target of around 1000 to 1050 levels. For target we will have a different analysis. Thank you.